Good morning. I am Malik. If you are confused this morning, you have every right to be. We are witnessing a financial anomaly that happens maybe once in a decade. If you watched the international news last night, the world is ending. The Dow Jones collapsed 800 points. Gold, the ultimate safe haven, crashed $60 an ounce. Silver is down 5%. The global signal is flashing red. Liquidity crisis, sell everything. But then you open your trading terminal in Karachi and you see green. Yesterday, Monday, February 2nd, the KSE 100 index didn't crash. It didn't even flinch. Closing level, 18,557. Gain, plus 883 points. Volume, 740 million shares. We are witnessing a historic decoupling. While global funds are dumping assets to raise cash, local investors are buying the dip. Is this a trap? Or is Pakistan the last value fortress left on Earth? Today, we are going to dissect this tale of two markets and tell you exactly how to trade the divergence. First, let's give credit where it's due. The bulls won Monday. For 2 weeks, we feared the Saudi exit. We thought Monday would be a bloodbath as funds moved capital to Riyadh. The data says otherwise. 1. Banks held the line. Mizan Bank, MEBL, closed at 488.74. MCB Bank closed at 410.63. They didn't crash. They consolidated. This tells us that local institutions, our mutual funds and insurance companies, stepped in to absorb whatever foreign selling hit the market. The liquidity vacuum was filled by local cash. 2. Energy is the monster. ATOC Refinery, ATRL, is trading at 870.15. OGDC closed at 327.13. The market has made a clear decision. Energy is the leader. With the index reclaiming the 18,500 level, the technical trend is undeniable. We are climbing the wall of worry. But we cannot ignore the fire outside our windows. You need to understand why gold crashed yesterday. In a normal crisis, gold goes up, but in a liquidity event, gold goes down. Why? Because big global hedge funds are getting margin calls on their tech and bond positions. They're forced to sell their winners, gold, to pay for their losers. The twist for Pakistan: this global pressure will find a way into our market, and it will enter through two doors: technology and exports. 1. The tech lag. Did you notice Systems Limited yesterday? It closed at 157.48. It barely moved while the index flew. TRG Pakistan looked heavy. Why? Because our tech sector is algorithmically tied to the NASDAQ. If US tech is in a bear market, our tech sector cannot fly solo. My warning: do not buy local tech stocks today. They are guilty by association. 2. The textile threat. Global recession fears means lower demand for clothes. Nishat Mills and Interloop are vulnerable here. If the US consumer stops spending, our textile orders vanish. So we have a local bull and a global bear. Who wins? The answer is energy. This is the bridge that connects both realities. Why energy wins globally? While gold crashed, oil held its ground near $115. The Trump blockade and the Malacca closure are physical realities. You can sell gold to pay a debt, but you can't run a factory with gold bars. You need diesel. The physical shortage protects oil stocks from the financial crash. Why energy wins locally? OGDC acts as a dollar proxy. If the global crash eventually forces the rupee to devalue, OGDC earns more. ATOC Refinery, ATRL, has pricing power. The trade: if the market dips today because of global fear, money will rotate out of risky tech and into safe energy. OGDC at 330 is the breakout level. If we cross that, the index goes to 18,600 regardless of what Wall Street does. What is on the radar for today, Tuesday, February 3rd? 1. The gold stocks, negative watch. Watch copper, TPLP, steel, ISL, ASL. With global commodities, copper, silver, crashing, these stocks should gap down today. Do not buy the dip. This is a deflationary signal. 2. The support level, 18,450. This is your line in the sand. As long as the KSE 100 stays above this, the local bull is in charge. If we break 18,450, the global bear has entered the room. Here is your battle plan for Tuesday. The reality: we are living in a split reality. Locally, we are strong, energy, banks. Globally, we are weak, tech, commodities. The strategy: long, energy, OGDC, ATRL. This is the only sector that works in both scenarios. Avoid tech and textiles. They are exposed to the global fire. Cash: keep 30% cash. If the global panic triggers a margin call in Asia today, we might see a sudden dip at 1 p.m. Be ready to buy OGDC if that happens. The world is screaming sell. Pakistan is screaming buy. Follow the local trend, but keep one hand on the exit door. I'm Malik. Good luck. Disclaimer: StockSense is an educational platform. I am an analyst, not a financial advisor. The strategies discussed here are based on data and market speculation. The stock market is a high-risk environment. Do not trade money you cannot afford to lose. Do your own research.